Welcome to everyone just coming into the webinar now. If you feel like you want to let us know where you're joining in from in the chat, please feel free to jump into the chat box. We'd love to hear where you're coming from, and we'll get started in just a few moments as we let everyone come into the webinar. Mark's coming from Brisbane. Hi, Mark, how are you? I realized when I did my last webinar that Brisbane is no longer on the same time zone as us. So I think, Mark, for you, it's 11:30 there. So thanks for joining us before lunch. And Sharma from Melbourne. This is our last webinar of the year. So we're very excited to talk all about what's happened in 2021. We'll give it just a moment and then we'll kick off. You can see a few more people joining now. Lisa, are you actually in Costa Rica? If you are, that's amazing. Welcome. Wow. Is that for holidays or you live in Costa Rica? Tassie, Sydney? Oh no, she's stranded. I hope you can get back soon, Lisa. Thank you so much for joining. All right, I think we'll kick off and then hopefully some more people will join us very soon. Well, I am very excited today. I've got Gemma here from ETF Securities to talk to us all about ETFs. Now, ETFs are very, very popular on Superhero. And so we're very excited to have Gemma here to tell us a little bit more about the performance of different ETFs in 2021. Some of the new ETFs that launched this year as well, and then some of the things that they're looking at for 2022. They've got some pretty exciting new things coming up. So we will kick off. I'll just share my screen. Now, for those of you that have been to a webinar with us before, you'll know that I've just got to go through this disclaimer, and that's that Superhero does not provide financial advice that considers your personal objectives, financial situation, or particular needs, and all investments carry risk. So please make sure you consider carefully before investing. Now, we'll be going through some charts and graphs today, so just remember that past performance is not indicative of future performance. And we've already gone through what we're going through today, so we will get straight into the content. Now, if you do have any questions throughout the webinar, please feel free to use the Q&A function, which you'll see down on your Zoom bar, and we'll get to them at the end probably. And I also am just going to start a little poll, which you might see pop up. Feel free to answer that poll. We've got some really interesting questions there about your views on ETFs and some of the things you're interested in. So we'd love to know that as well. So Gemma, 2021, look, this graph looks like it's on its way up and not slowing down. So tell us a little bit more about, I guess, the general market of ETFs in Australia and what you saw in 2021.
Yeah, so we've just seen huge amounts of growth in the Australian ETF market, really ticking up over the last sort of 5-6 years. But you can see here in sort of 2020 and 2021, we've just had exponential growth. It's just sort of exploded even more. So you can see how sharply that black line starts to rise there from about 2020. So we're now sitting at about 127 billion in AUM across the market. We actually added $32 billion this year, which is just huge. And really, we're just seeing so much money flooding into this market. I think it's been spurred on by the pandemic. So more people at home, more people wanting to invest, and obviously platforms like Superhero as well, giving more access to investors as well, people who maybe traditionally didn't have as much easy access to the market and to ETFs as well. And in terms of the number of products, you can see the green bars there, there's just been increasing, a steady increase in the number of products over the last sort of 10 years. So there's now 243 products across the ASX and Chi-X, and we actually added 25 new products this year.
Wow, that is a whole lot. And yeah, it's interesting. How does this compare Australia's ETF market to what we see in markets like the US?
Yeah, so we're a lot smaller than the US. Their market is just crazy and growing massively as well. So we're probably where the US was maybe 5 years ago. Their product numbers would be in the thousands. You can pretty much get an ETF for everything over there. So it's a very different market. But we're getting to that point now where we're seeing a lot of individual investors using ETFs like they do in the US. And that's really, as I said, it's really in the last 5 years that we're seeing more and more uptake of the ETF market here.
Yeah, definitely. We'll get into a little bit more about those themes that we're seeing very shortly. So what does this chart here show us, Gemma?
So here we're looking at the market volume and the flows into the ETF space. So similarly, we're seeing, the amount of trading ETFs, the amount of net flow coming in is all increasing. A really interesting line to look at there is that huge green line that shoots up way above everything else. So that is the amount of value traded in March 2020. So obviously right when the pandemic hit, you can just see that there was so much market movement there. And a lot of that obviously was people coming out. People didn't want to take on that risk, concerned about, how much further the markets could fall. But actually, if you look at the flow increase from that point, you can see a lot of people were buying in. So a lot of people were taking advantage of that big dip that we saw, really cheap pricing and a lot of opportunities there. So it's been really interesting looking at, how that's changed since the pandemic. And you can even see the flow numbers there just in the last 2 years have pretty much doubled from where we were in 2019.
Yeah, it's quite amazing. And I think, ETFs often have this, appeal of getting around, they're tracking the market, right? And I think what people did see after the crash of 2020 was ETFs, the performance was quite stellar on a lot of them. And it's not to say that that will continue. And we've seen a bit of that slowdown as well, but people definitely saw that, ETFs aren't just the tracking along, like you can get some really good growth out of ETFs as well, particularly in some of the trends that we've seen run and the underlying companies that have done really well out of the post-pandemic environment as well.
Yeah, exactly. Particularly in like that technology space, some of the returns investors were able to get from those ETFs that gave that broad exposure there were just, 100% in some cases. It was pretty amazing.
Yeah. So now to look at some ETF performance. Now there's a bit of a long list on this one. So I'd love if you could just pick out, or I guess maybe we can even go to the next slide and just pick out some of the main thematic ETFs that we've seen. But while we're on this slide, what does this overall chart really tell us about how the market performed and what you saw perform really well and maybe what you also didn't see perform so well in 2021?
Yeah, well, I think this is actually a really interesting slide. This is just looking at the performance of our range of ETFs over the last year. But what's interesting is it's very different to what we saw last year. So sort of taking those leveraged exposures out, so that's a leveraged NASDAQ exposure, so that's always going to be sort of either at the top or the bottom end.
Yeah.
But for example, India was our best performing equity ETF this year, up over 28%. Last year, I think it was down about 1 or 2%. And actually at the height of the pandemic, it would have been down about 20%. So It really had a strong recovery this year.
India, just while we're on that one, Gemma, probably, myself as a personal investor, hadn't really thought much about India. Why is it that India's performed quite well this year? What are the kind of trends that we're seeing in India that is leading to that?
Yes, I guess we like to call India the new China. So it's sort of that emerging market, but moving into a lot more regulated market as well. And we're seeing a lot of businesses wanting to do, who sort of move out of China and wanting to move their business into India. And they've been increasing a lot of regulations and reforms in India recently. And just their recovery since the pandemic is, a lot of it was based on the fact that they didn't go back into lockdown at the start of this year, even when they had the really high outbreak. So they've just sort of continued that economic recovery. And it's been one of our strongest performers. So it's a really interesting space.
Yeah, definitely one to look at.
And then I guess just to say on this slide as well, so as I was saying, it's very different to last year. So last year, ACDC was the best performing ETF on the market. It was up about 60% for the year. You'll see this year, yes, the thematics have done well, but we have seen a bit of a shift to value. I think we saw at the start of this year. So like our US high yield ETF there is one of the top performing as well. But yeah, it's just been a really interesting market, and things like gold, which was, the darling of 2020, pretty flat again this year. So it'd be interesting to see what happens next year as well in this space.
Definitely. Now, moving on to thematics, ETF securities, I would say are probably known for their thematics, definitely in the Australian market. We've got a few different ETF providers out there, but you guys really do focus on your thematics. Now, obviously, we can see by this chart, thematics have just grown and grown. What do you think are some of the factors influencing that?
Yeah, so I think, obviously 2020, we sort of saw some of the returns that people could get from these thematics, and they became really hot talking points. And I think what we're seeing is sort of younger demographics coming to the market, people wanting to get something a bit more exciting in their portfolio rather than just ASX 200 stocks. Yeah, exactly. So, now you can go out and buy cloud computing and semiconductors and battery technology. Like, it's all things that people are hearing about that probably didn't think they could access before. But an ETF in that thematic is just a really simple wrapper and an easy way for people to get that exposure. So I think that's why we're seeing, you can see on the chart here, it's just doubled from 2019 to 2020, and then it's more than doubled again this year. So it's really just a growing space, that thematic space. So I think people want the excitement and the interesting investments in their portfolio.
Yeah, definitely. And like we've seen, if you are in an ASX 200 type ETF, I guess there's a benefit there in that you're getting multi-industry exposure, you're getting really, really wide company exposure. But like you said, you will only achieve market returns. So if the market has a great year, you'll have a great year. Not so great, not so great. And, thematics aren't without their risk either. I guess you're betting more on a particular industry. But personally, I do like the fact that a thematic, as part of my overall portfolio, I can pick almost an industry or a sector that I might think could see some really good growth in the future, and feel a little bit more like it's an active choice in what I'm investing in, but still getting that diversification of different companies in the space as well, particularly when it's a new industry, right? And you might not know exactly who the top players are or who the top players might emerge to be, but you can really get that broad exposure in a particular theme there.
Yeah, exactly. And if it's like a global play as well, it's a lot harder to know about those individual companies. And as you said, if it's emerging, some of them are smaller cap. So the ETF is just, a really easy wrapper there.
Amazing. And these are some of your thematics and what they've done in the past year. We spoke about battery tech and lithium and how that performed absolutely insanely last year. What can you tell us, I guess, about how these robotics is on the screen, how these teams have performed this year, maybe some of the reasons why we've seen biotech over there not doing so well. What has led to some of these performances, and what do you see going into 2022 as well?
Yeah, so as I said, I think we've still had really strong performance across these thematics. Getting 20% plus returns is still a great return. Obviously not as strong as last year. And that's really because we did start to see a few headwinds. We've had rising interest rate potential, rising inflation, which is slowing that growth a little bit. But still, as those long-term plays, I think these are really interesting spaces. And you can tell that investors do as well by the amount of money still that's coming into those. Yeah. So things like the FANG ETF, that's your top 10 FANG type companies. So think Facebook or Meta, as they're called now, Google, Amazon, Apple, Netflix, and a few others like that. So that was one of our top performers last year and saw huge amounts of inflows. Still had about 60 million in this year, up 25%. But I think what we've seen is more people interested in the tech ETF that we have. So you can see that's had about 125 million of inflows. And that's because it's run using a Morningstar index, and they apply a fair value screen. So it's looking for global tech companies that are trading closest to or below fair value. Mm-hmm. So I think that's why, obviously, those big FANG type names had a huge run last year, and people may be a bit concerned about the valuations of them. So I think that's why we saw more inflow into the tech. But I mean, things like the battery, the AC/DC that we said, that's had almost 400 million in this year, which has been amazing. And I think people are more and more concerned now about investing in those sustainable things. So like clean energy, obviously you're getting exposure to the electric vehicle market here. And I'll talk about it in a moment, but we launched another clean energy ETF, which is a hydrogen play. And that's really where we've seen most of the flows into this year. People really focused on that sustainable investing side.
Definitely. I think when it comes to these FANG stocks or the big tech companies, I think it's really interesting. In 2020 and 2021, they just keep growing. But I think what I like about some of those companies is that there is some growth there, and obviously some of that is baked into the share price, but they're still achieving growth, but they actually are profitable as well. Whereas, you know, we've also seen some other companies IPO this year that have never had a sale, but people are investing in them because they believe in their future. So I think it's important to think about what your objectives are and getting that balance between maybe some really strong potential growth, but then also some of these companies that are providing fair value, and might have, you know, some higher profits now as well. And a lot of these themes really are still quite early on, right? Like they might have been around for 5-10 years, but we're really only seeing, I guess, the output of them now. You know, things like electric vehicles. Tesla's been around for a while, but we're all of a sudden now seeing it become really mainstream, and all of the major car companies getting into electric vehicles. So no doubt that that is an industry that will continue to grow and grow in the future.
Yeah, absolutely. And that's a really good point. And I've actually got a slide on that a little bit later that will talk about, you know, just understanding where each of these themes are in their growth pattern, and sort of what your risk profile is, and are you happy to take on an emerging theme, or do you want something that's a bit more established?
Absolutely.
And I was just going to comment on the biotech there, and because obviously not every theme is up this year, and biotech obviously was in the spotlight last year massively with COVID-19, but it has fallen away this year, and the reason for that being is just increased regulation in the US. So they're sort of tightening the rules around drug pricing and competition over there. So we have seen that bit of headwind against the biotech sector this year. But again, you're taking a long-term view on all these thematics. So, you know, do you think the biotech sector is going to do well over the next 5-10 years is the question.
Definitely. I think that's always really important too, right? Is things will go up and down. We saw that in an extreme way last year with how quickly the market dipped, but then bounced back as well. So it really is taking that long-term view over not only just 1 year as well, but over multiple years. So new thematics, these are some of the thematics that you guys launched in 2021. Obviously, some of these I think are quite a few months old now, others are even more recent. I'd love to hear a bit about why these 3 themes, and where you guys see them going. Obviously, you're backing them in terms of having a product to support these. But I'd also love to obviously hear about the theme, but then also what are the companies or some of the companies that are sitting behind these ETFs that we might not know too much about.
Yeah, absolutely. So the first one we launched this year was the Semiconductor ETF. And we launched this fund in early September. So all of these have only really been around for a couple of months, as you said. So that performance there is over sort of 2 or 3 months. So that's been really positive for each of these. Yeah, but I mean, semiconductors, think of them basically as a microchip. So it's the brains behind all modern technology. So everything from your phone to your computer, your oven's got one in it. You know, electric vehicles are really driving the space as well, because they require about 3 times as many semiconductors as combustion engine vehicles. So really seeing a lot of growth in the semiconductor space now. And, you know, there's been a chip shortage in the last year. So that's sort of why, you know, semiconductors has been around for years and years, but that's sort of why we felt it was a good time to be bringing this to the market, because obviously we're seeing increasing demand, you know, more people working from home, relying on technology at the moment. So that's been a big driver there. So that companies in there would include the likes of Intel, ASML, NVIDIA, if people have heard of these, but you can see the full list of holdings on our website for all of the funds, and we do have some stock stories on there as well, which probably explain them a little bit better than I can. But that's been a really interesting space, and as I said, a lot of things driving that going forward. The second one we launched was hydrogen, and this, as I said, has been extremely popular. Like AC/DC, people just looking at sustainability and these sort of clean energy alternatives. And hydrogen's at a really interesting space at the moment, because we're seeing it get to the point where green hydrogen is actually a viable alternative to fossil fuels. And the benefit of hydrogen is that it actually doesn't produce any greenhouse gas emissions, and it has really high energy density. So it's obviously not a new element. It's one of the most abundant elements on Earth, but we're just getting to that tipping point now where the technology is advanced enough that it can actually be used as an alternative to fossil fuels. So that's been a really interesting one as well.
Yeah, I think it's really important to look at obviously what the markets are doing, but when we look around us, it is things like technology, like infrastructure as well, like government support and government commitment. All of these things do really impact how an investment can take off or not, or how long it will take for these things to get off the ground as well.
Yeah, 100%. And the government support, I think, is really important. That's pretty much what takes something from, I guess, a fad to an actual mega trend. If it's got government support and government backing, then it's going to be a long-term theme, basically. And then the final one there that we launched is the FinTech and Blockchain ETF, FTech. So this one we only launched in mid-October. So that's been the sort of smallest amount of time since then. And what this one does is it provides equal weight exposure across the FinTech industry. So think companies like Afterpay, Visa, PayPal. But what we've also included in here is a number of decentralized finance and blockchain companies. So these are companies that are linked to, say, digital wallets or crypto mining. It's only a very small portion of the portfolio, and it's equally weighted. So it's not going to have a huge impact on the portfolio like a sort of a pure crypto type fund would. But it just gives you that exposure to this emerging fintech trend of decentralized finance. So again, it's a really interesting space. I think the reason that one's been a bit smaller is a lot of Australian investors are already exposed to the likes of Afterpay and Square, and sort of maybe think they've already got enough exposure to this theme. But the ETF gives you a really nice diversified and a global exposure there as well.
I think the fintech space as a whole truly has seen so much explosion over the past couple of years, though. When we look at, even the AFR, the Financial Review, came out with their kind of fast starters or fast grower type list, and there were an extreme amount of fintechs listed on there, share trading platforms, payment systems. I think the business to business space is really changing as well too. So it's important to not just look at, obviously we've got the likes of Afterpay and Zip that everyone sees in their faces every day, but there's a lot going on even in the business space and in Australia as well that's really amazing, and there's a lot of growth there.
Yeah, exactly. And like you said, I think people just sort of don't think about it as much as they do with other technology advances, but it's such a huge space. It's definitely worth considering.
Now, we spoke about this a little bit before, but what does this graph show us in terms of, I guess, progression of ETFs from just a new start or a new, exciting theme to really building out to what we see the big industry funds or market tracking funds?
Yeah, so I guess the point of this is really just to make sure you understand the type of thematic you're getting into, because as we said, a lot of these are in very early stage adoption, and when they're in that early stage, they can be a lot riskier. So if you're someone who doesn't want to be taking on as much risk, but you still want to get into a thematic, you're going to be looking at something that's much more in sort of the late majority and the laggard stage. So something like a technology like semiconductors and microchips, which have been around for years and are used in everything. So you can be pretty confident that that theme is well adopted.
Yeah.
Then we have areas like the battery technology, obviously we spoke about, being used in electric vehicles. We're sort of just at that tipping point now where it's starting to go from sort of early adopters to sort of early majority. We're seeing the majority of manufacturers now committing to electric vehicles, and that's going to sort of become their mainstream vehicle in the next couple of decades. So it's just getting an understanding of where the thematics are. So something like hydrogen, on the other hand, is very much in that innovative stage, because we're only just getting to the point where the technology and the cost is sort of viable enough for green hydrogen to be used as an alternative to fossil fuels. It hasn't had that huge uptake yet. So just something to consider when you're looking at these themes, where do you sit on the risk profile, and sort of what sort of thematic are you happy to take on?
Yeah, that's really important to remember that. I think sometimes ETFs can get grouped together a little bit and saying, all ETFs are the same, they just track the general market, but that's actually not the case. And as we see more and more ETFs come onto the market, particularly in Australia as well, it's amazing because it does provide that more broad difference of risk, return, thematics, industry funds, but it's important to remember that you do still need to think about your decision and not just pick the first ETF that you see as well.
Yeah.
And talking about picking the right theme, this screen here, Gemma, shows us a little bit, I guess, about what we should be considering when we're thinking about investing in a thematic.
Yeah, exactly. So I think we sort of identify 5 key things that you need to consider when you're picking the right theme for you. So first, as I mentioned, you want to make sure it's linked to a mega trend. You don't want something that's just going to be sort of a passing fad. And I guess this kind of links with the long term. You know, all of the thematics that we're launching at ETF Securities, we're launching them with that 5, 10, 20-year view. These are things that are going to structurally change the way we live. So you want to make sure it's got, I guess, the government and corporate backing, a lot of money going into it, and it's something that's actually a viable long-term trend as well. Of course, you want it to align with your views and your values. And a lot of this comes down to, I guess, the idea of things like sustainable investing. So if you do want to include, the environment and clean energy and stuff like that in your investment, then you might want to look at things like the battery tech and the hydrogen ETFs. Or you might think, I don't want tobacco companies, so I'll look at a broader ESG type fund. So there's a lot of different ETFs out there now that will fit, and there's almost 250 here in the market. So we're getting to that point where you can pretty much pick and choose exactly what's right for you. The other thing you want it to be is sector and or country agnostic. So a lot of these themes spread right across the globe and right across sectors. So thinking something like our robotics and AI, ETF Robo, for example, you wouldn't just want to take that on a really focused and narrow lens, because actually it's not just technology companies in there, there's healthcare companies and there's agriculture companies that are investing in robotics and AI. So you want to make sure that you're getting, I guess, the full exposure to the theme. And, that might be that it spreads across global and it spreads across multiple sectors as well. And that gives you that nice diversification.
Yeah, and I think we'll go through risks at the end, but that way you do minimize some of those risks a lot more, right? Because we know things like regulatory and government factors can really impact things. So, while there can be benefits in picking a country, if you do really believe, for example, India, if you think there's a lot of growth to be had, that's great. But you also need to consider the fact that, if something does happen specifically to that country, you're more highly exposed to that country. And therefore, it could fluctuate based on that as well, either for the better or for the positive or for the negative as well.
Yeah, exactly. And then I guess just the final thing on this as well is making sure that the fund is true to label. And what we mean by this is, I guess there's a lot of ETFs out there that say one thing in the name, but maybe actually doing something quite different in the portfolio. So I think I said before, on all our ETFs, you can download the full list of holdings on our website. And I think it's just important just to make sure that you're actually getting what the fund wrapper says you're getting. And you can see that in the methodologies and the fact sheets, and it should actually explain in more detail what's going to be in there. But, for example, there's a crypto ETF in the US that holds Tesla. And you think, yes, Tesla has some investment in Bitcoin, but, is it actually a crypto related stock? So it's just things like that, just to make sure you're looking at what you're actually getting hold of.
Yeah, definitely, particularly when it does come to things like sustainability. We've got a lot of sustainable ETFs now as well, but it's important to actually look, and most of the ETFs, they will tell you on their fact sheet exactly what they are including, excluding, screening for. So it is really important to look at that. And also the other thing I think to mention here is the percentage weighting of different stocks. You mentioned, Gemma, that there are some ETFs that will have equal weighting. So they might hold, let's say they hold 20 companies and each company would be held at 5%. Whereas you might have other ETFs, that would have a very large percentage holding of one particular stock and only tiny amounts of others. So it's really important to look at that, because that can very much affect performance as well.
Yeah, that's a really good point.
Now, Gemma, you spoke before about, I guess, building a portfolio of ETFs. And I think we are seeing this a lot more, particularly with retail investors, where you might have someone that holds an entire portfolio of ETFs. They might not actually invest in individual stocks at all. And the other, I guess, way of doing it is that you might have quite a lot of your portfolio in ETFs and pick a few stocks, or you might choose to hold mostly stocks and have a few ETFs. So people really are building what works for them in terms of not only the ETFs that they choose, but also, I guess, their percentage weighting to ETFs versus stocks as well. When it comes to I guess, a strategy for investing in ETFs, whether that's industry funds or thematics, what does this side tell us that we could look at?
Yeah, so I guess, again, it sort of comes back down to your risk profile. So we might see a typical investor hold these thematic type ETFs in their satellite portfolio. So typically in your core portfolio, that's where you're going to hold your sort of vanilla, long-term, less risky stocks or ETFs, whatever you want in there. And then in the satellite portfolio is where you can take on a little bit more risk. And these tend to be sort of 5 to 10% allocation. So it's a smaller amount of the portfolio, but that's typically where we see a lot of the thematics come in. What's interesting now, though, is we are seeing a lot of, I guess, new age investors who solely invest in thematics. And in that case, it's more things like the FANG and the tech, sort of your broad established thematics that would sit in the core of the portfolio. And then things like battery tech and robo sitting in the satellite part. What we also see a lot of people doing as well, particularly if you're more risk averse, is using a thematic as a tilt. So this is sort of like a 3 to 6 months, I guess, alpha play, trying to get a bit of performance over that period. And then you might actually even find that, you know, if it's doing well and you're happy to take on that risk, then it does start to move into the satellite part of your portfolio as well. It just sort of depends how active you want to be there. But, you know, we call them satellites, but as I said, all these thematics are really sort of 5 to 10 year, you know, plus plays anyway. So they are just sort of that set and forget, and, you know, hopefully watch the returns come through.
Yeah, definitely. And I think, you know, for a lot of retail investors today, there isn't often an expectation that your portfolio is going to get to 100%, or we're not necessarily trying to outperform the market by extremes, but most of us probably would like to see performance that might be slightly better than the market. So it's nice to see that there are ways to incorporate that without risking losing all of our money at the same time. So crypto. Now, I asked a question in the poll about the themes people were interested in, which was very interesting. The top one was actually electric vehicles and battery technology. No surprise when we've seen so much interest in that battery tech and lithium ETF. But we actually had 57%, which was on equal par with sustainability and climate change as the second biggest theme people were really interested in investing in. And we spoke before about this fintech and blockchain ETF, which has already launched, but I guess is more of an industry-based companies that are involved in financial technology and blockchain, but not direct exposure to the cryptocurrencies themselves. So a little bit different there. But from the looks of things, ETF Securities will be going into more of a direct crypto player when it comes to ETFs for next year.
Yes, so we have just announced last week that we're going to be entering or hoping to enter the physical crypto space. So we're planning to launch Australia's first physical Bitcoin and physical Ethereum ETFs, or I guess physical digital, however you want to call it. But, you know, this has absolutely been a really interesting space. Overseas this year, we saw the first physical Bitcoin ETF launched in Canada, and that had hundreds of millions of dollars flowing into it. You know, even here we saw a crypto linked ETF, which again, it's not the physical, but invest in those companies, you know, sort of in the blockchain and the digital wallet type side. And that broke the ASX's record for the most amount of trading on day one. So you can just see the investor appetite is really there for these sorts of products. And it's just such an easy way for investors to be able to get exposure. You're not taking on the risk of digital wallets or the expense of having to, you know, sort of trade Bitcoin through those platforms. This is going to be a really easy way to access Bitcoin and Ethereum through the Australian share market.
Yeah, that's awesome. Please ignore, I've just noticed everyone, there's a slight error. Those numbers on the slides are not related to these, just to call that out. There's actually no percentage. These haven't launched yet. That's my bad on that one. But I think, yeah, Gemma, like you said, it's funny, ETFs kind of started in Australia, I know, as this way to get exposure not only to a diversified range of assets here, but also to international companies. And now we're seeing that with asset classes as well. So it's really amazing to me that you can get access to Australian companies, international companies, and that's all across the world, whether that's the US, Asia, Europe. But now we can actually get, I think property real estate investment trusts, for example, were a play in property, but now we're actually seeing even cryptocurrency you can get, oh sorry, my light's gone out, even cryptocurrency you can get exposure to all from the ASX now. And like you said, I think cost is a really, really big part of that people will be looking for, that diversified element, and having everything all in one place too, which I don't know about everyone else, but I think a lot of us have a lot of different apps now that we're trying to manage between. And so being able to invest in those assets all in one place and being able to see your performance all in one place is also a really great thing that these ETFs will bring to the market.
Yeah, exactly. Like just being able to go into your one Superhero account and see all your stocks, all your shares, all your crypto in there as well. That's going to be really cool.
Yeah, and I mean, these two cryptocurrencies are the most widely accepted, the biggest in the market. So I guess while we know cryptocurrency is extremely volatile, these two are probably the most proven out of all of them.
Yeah, absolutely. It's certainly a very risky investment, and we've seen how volatile crypto's been just in the last couple of weeks even. But for investors that do want to get that exposure, this is just a really simple way of getting that physical Bitcoin or Ethereum there.
Definitely. Now, obviously, crypto is going to be a big theme in 2022. We've spoken a lot about sustainability already, but where do you see sustainability going for next year and beyond?
Yeah, so I think, we've had about 500 million of inflows into our green theme ETFs this year. And we just expect this growth to continue for 2020. We're getting to that point where investors are acutely aware of wanting to be involved in decarbonisation in some way. We're seeing global governments committing to net zero by sort of 2050, 2060. And even just the amount of green ETFs and things like that coming to the market, I expect there'll be quite a few more next year as well, sort of going down that clean energy and I guess clean water and wind and solar power type spaces as well. It's just a theme that we think is going to continue really for the next couple of decades. There's going to be so much interest in that space.
Absolutely. Now, as much as we all love ETFs and we love investing, we do always need to consider some of the risks. And we thought it would be really important that we went through a couple of those today. I think not only just when you're deciding whether ETFs or investments are for you generally, but also when you are picking between different ETFs, some of the things that you might want to consider as well. Gemma, maybe we'll just pick out a few of these and just explain them in a little bit of detail for everyone.
Yeah, of course. Yeah. So I guess the first one there, market risk, is quite an obvious one, but as we said, and as we've seen with some of those thematics, there's no guarantee of returns. And particularly in that thematic space, it can be quite volatile. So just something to be aware of, that, the markets can go down as much as they can go up as well. We have things like currency risk. So a lot of those thematics, obviously, they're global plays. So if you are investing in a global ETF, you're most likely getting the global currency exposures in there as well. So if you don't want to take on that currency risk, then you would need to look for a hedged option in the ETF space there. Then we have things like country and emerging market risk, which, Rachel, you mentioned earlier. Obviously, emerging markets are a lot riskier. Things can change there a lot quicker. There could be sort of regulatory changes that happen as well. So just something to be aware of, that there is that heightened risk. And then I guess the final one to highlight would be the understanding of index constituents. And that comes back to what I said about making sure that the ETF actually does what you think it's going to do, and I guess what it says it's going to do, and making sure actually what is captured in that portfolio.
Definitely. And I think ETF providers' websites are the best place to go for that. I've always found them very, very helpful. They break down everything for you. They give you the complete, pie chart of everything that you need to know, and will often link you to exactly what the index is as well, which is great. Now, before we jump into a Q&A, I think it was around 80% of you are already investing in ETFs, which is awesome. But just wanted to give you a reminder of what it's like to buy ETFs with Superhero. You'll see our Invest tab over there on the right. And that you're seeing there is our themes. I'm not sure whether everyone knows about themes or whether you've seen these on our platform, but these are really some, I guess, mostly thematics, but a bunch of different ETFs that we've really highlighted, but the way that we've done this is by naming them slightly differently to what the actual ETF is called. We saw a lot of ETF names in these slides, and we know that sometimes it can be a little bit difficult to understand exactly what that means. So what we've tried to do with themes is you are investing in an ETF, but we've just named it slightly differently to give you a bit more of an easier to understand explanation of what the ETF actually is. But just a reminder that we have $0 brokerage to buy any Aussie ETFs. So we don't charge you any fees when you buy into Australian ETFs, and you can see those with a little Australian flag. We just charge you $5 when you want to sell, but you could buy into the same ETF 10 times if you wanted to each month, and really build up your portfolio that way. You don't have to have thousands of dollars at a time and then do one big transaction. You can do it over time, and then just one $5 brokerage when you do want to sell. And we do have zero brokerage on US ETFs as well. So we spoke a lot today about Australian ETFs, which are great because you can get exposure to international markets and US markets as well. But if you do want to invest in, there are a lot of ETFs that are in the US, in particular themes like electric vehicles, for example, which we can see there, and there's zero brokerage to trade those as well. So you'll just have the fee when you go into US dollars in your wallet, but then once you have US dollars, it's free to trade as much as you want for those. We spoke about themes already as well, and you can filter between Aussie and US if you'd like, but you can see there on the flags. Now we'll go to a quick Q&A. We've got a few minutes, so if anyone does have any questions, please feel free to pop those in the Q&A section. A couple of questions here, Gemma, for you. One question says, is battery tech over in its meteoric rise? Now, I think like we spoke about, battery tech really was the market darling of last year when it came to ETFs. It saw some great performance. And I guess there is a question for some people, is this trend not over, but is it ever going to keep going as well as it was, or has the hype died down a little bit?
Yeah, so I think, if you look at the returns for any of those tech-based ETFs over 2020, then you'd probably be disappointed with anything you get going forward, because, we had that huge dip in March, and the returns since then, the recovery was just phenomenal. So look, it would be hard, I think, to get those similar sort of returns in normal market conditions on an annual basis. But in terms of the thematic, I still think it's got huge potential long term. We're still very much in that early adopter stage. There's global governments have said they're going to phase out combustion engine vehicles over the next couple of decades. So when we get to that point, there's just going to be huge amounts of growth in the electric vehicle market. And battery technology is also used in grid storage. So as we see the increase of solar power and wind power, battery technology in the grid storage is actually used to store that energy, because obviously it's not always sunny, it's not always windy. So you need the battery source there to actually help supply the electricity. So much potential, I think, still going forward. Whether it will get 60% returns year on year, it's hard to say, but I still think it's got good potential.
Yeah, definitely. Question here from Annette, which is really interesting. Thoughts on the metaverse? Now, obviously, we've heard a lot about the metaverse in the past couple of months, with particularly Facebook changing its name. I know Square has also recently announced a change to its name to become more of, we're seeing these tech companies going from being social media platforms or simply payment systems to really creating a whole digital world for us. Annette's question was, are there any ETFs that are already looking at this trend, or is there plans to do anything about the metaverse in future?
Yeah, so in the US, there's probably about 4 or 5 specific metaverse ETFs that you can get. So obviously you guys can trade US ETFs on Superhero, so they'd be ones worth looking at. In Australia, there's nothing specific, but we have had a look at this, and I guess a bit of a look at what's in the portfolio, and found that it's very similar to something like the NASDAQ 100 or even the FANG in terms of the companies that are actually involved. So, the way that the Australian ETF market's going, there probably will be something that comes out in that space, but how quickly that comes out and how different it actually ends up looking to some of the other products that are already out there is going to be interesting to see.
Yeah, I mean, we know Facebook's kind of one of the big big companies going into this space. So Annette, I guess if you were interested in the metaverse, it'd be cool to look at what ETFs hold Facebook, for example, or Meta as it now is.
Exactly.
And looking at those companies specifically, which if you do a quick Google search on Aussie ETFs that have Facebook, I'm sure you'll be able to find that quite easily. Question here, are there bond ETFs, Gemma?
There are. So we don't have any at ETF Securities, but I would say pretty much all of our competitors do. So the likes of iShares, Vanguard, BeatShares, VanEck all do some sort of fixed interest or bond type ETF. So I would recommend, going to their websites and having a look at what they offer in that space.
Yeah, but you guys are more focused on the thematic space, I guess.
Exactly, yeah.
So, yeah. Interesting question here. Are there ETFs with a shorter investment duration than 6 to 10 years, for example, 2 years? So I guess the question is here, if you wanted to invest for 2 years, for example, when I think about that, I think about things like wanting to invest for a property deposit, or you've got a slightly shorter term investment horizon that you might want to get your money out. How does ETF investing work with that kind of short to medium term investment?
Yeah, so technically you can buy and sell in the same day. So really, when we say this sort of 5-10 year plus outlook, that's sort of where we're thinking that these are trends that are going to continue to have legs for that long amount of time. So rather than just something that may be popular for 1 year, we think these are going to be really popular for the next sort of 10 years plus. So you can still absolutely take a shorter term view of that and say, well, I need to take my money out in 2 years' time, so I'm just going to sit in the growth phase of this for the 2 years, and then you might want to get it back in at some point in the future. So you can really buy and sell them as much as you want to. You might have seen, like last year, we had huge returns in some of those ETFs. If you wanted to take a profit at that point, that's completely up to you. You could have sold out after 6 months with 50% returns and said, yep, I'm done. But it's really completely up to you as the investor. That's just our view of how I guess strong the thematic is, in terms of we think it's got those really long legs for growth, but you can absolutely take it out short term.
Yeah, and I guess it's just all about remembering that markets are volatile. So when you look at most markets over the long term, that if you took out the daily movements, it does look like a little bit more of a straight line. Whereas if you're looking at the peaks and troughs, even over quite a few months, sometimes you're not buying at exactly the right time, which is extremely hard to do. It can be difficult sometimes, and you may find yourself in a more volatile position as opposed to over the longer term. That's all. So you just need to keep that in mind. Pat, quick question from you. How much does Superhero charge when you sell US ETFs? So US shares work a little bit different. If I just go back to when we have an Aussie trade, you can buy into ETFs each time for $0. For shares, it's $5, and it's $5 to buy and sell for shares. So if you think about ETFs, there's just no fee to buy and then $5 to sell. But we do charge brokerage normally on every trade, if you like. So every time you buy or sell, if it's a share, you'll get charged that $5. US shares are done with Superhero a little bit differently to that. So we charge our fees not on trades, but on the transfer from Australian dollars to US dollars. So we charge one fee at the point of that currency transfer, but once you hold those US dollars, you can buy and sell shares and ETFs as much as you like, and you won't be charged any brokerage fees on the trade. So I hope that answers your question. So there would be no direct charge when you sell an ETF, so you could buy and sell as much as you like with no brokerage fees. Now, something we haven't covered today, which is just important to know, there is a management fee in ETFs, Gemma, that is charged, but that is all incorporated into the performance of the ETF. Is that correct? So you won't see that as an additional fee, but there is, a cost there as part of holding that asset, but that's all incorporated in the performance.
Yeah, that's exactly right. So it's charged on an annual basis, and it pretty much comes out of the return. So say it was a 35 basis points charge over a year and you made 10% returns, your return would actually be 9.65%.
Yes, absolutely. Just looking at a few other questions. Interesting question here, Gemma. Do ETFs get delisted like shares? Now we know there are times when some companies will actually pull off the stock market or delist. Does that happen with ETFs at all?
It does, yeah. And it's probably something we'll start to see more as the ETF market here in Australia matures. So for example, we ourselves have closed a couple of funds in the past, and these are funds that really just haven't had any uptake from investors, and that we don't think are going to, receive any uptake going forward as well.
Sure.
But from our side, we would never close a fund unless we'd given it enough time to actually, have a chance in the market. So something like sort of 3 years would be the minimum. So, all the ETFs we launch now, we do a lot of research into them to make sure it's something that we think is going to have, really strong legs and get a lot of interest from investors. So it's not something that we just, do on the fly or do without a lot of consideration. But it does happen. And we've seen a few of our competitors closing funds recently as well.
Sure. And as an investor in one of those funds, what would happen, I guess, to your investment at the point of delisting?
Yeah, so you'd normally get quite a few weeks notice. So what that means is then you're welcome to trade out on the exchange. And you'd obviously then get to pick what price you're trading out at, obviously depending on where the market goes in that time. The other thing you can do, if you don't want to pay the brokerage of trading out, you can just leave your funds there. And then on the last day of trading, you'll get forcibly redeemed, and you'll basically get paid out at the closing price of that last day.
Okay, great. Thanks to know. So your money's not going to go missing.
Yeah, you're not going to lose anything.
It'll just sell out, or if you don't sell out before that date. Awesome.
Yeah.
Question here on dividends. Do ETFs pay dividends?
Yes, they do. So all of our ETFs will pass on any dividends that are received from the underlying companies. So obviously a lot of these tech-based and thematic ETFs, they're focused on growth. So a lot of those underlying companies don't pay a lot of dividends, but anything they do would be passed on to the investors. And we do have, funds that target yield. I mentioned that US high yield ZYUS. So again, that's more of a 4% type dividend on that one. But yeah, so anything that does pay a dividend will be passed on to you.
Yeah, definitely. And in terms of, your Superhero account, at the moment that gets paid out to you in what we call cash in your wallet. So you would see, for example, a $100 dividend paid out from the high yield ETF, and high yield meaning that these companies do often pay dividends, just for those that didn't quite get that. But you would see that in cash as in your Superhero wallet and could use that towards your next investment. I know there's been a couple of questions, and people do ask us about dividend reinvestment plans, which would mean that any dividends would get automatically reinvested back into that investment. It is something we know has been asked for, and our team are very aware of that. We've got lots coming in 2022. So very aware that is something that people would like, but for the moment, it just sits in your wallet as cash and ready for you to make towards that next investment, which you could choose to put back into that ETF if you wanted to. Now, I'm just checking if there's any others, and if we don't get to any other questions that you have, we'll try to get back to you on email as well. I know stop losses, there was a question there from Matthew as well around another feature. Again, something that's definitely on the list for us too.
There is just a question on whether you can lose more than your initial value, which is a really interesting question. So with ETFs, you can only lose as much as you put in. So it can absolutely go to zero if it really underperforms, but you're never going to be sort of owing money to the ETF provider. So I think it's an important aspect. Even on our leveraged ETFs at ETF Securities, you can't lose more than you've put in.
Yeah, absolutely. And I think going back to the importance of diversification, it is much more unlikely that an entire ETF would go to zero, because all of the companies in that ETF would have to go to zero. Obviously, there's a much higher risk of one company, if you're invested in one company, of that happening, than if you've got tens or hundreds of companies in an ETF. So a lot less of a risk of it going to zero, but definitely no less than zero there. Molly has a question about when dividends would be paid. Are there normal times, Gemma, that ETFs get paid out every year, or does it differ for each ETF?
Yeah, so it's normally on, say, a quarterly, semi-annual or annual basis. I think there are a couple of high dividend paying ETFs that will pay monthly. But from our side, most of them, if they're targeting dividends, it'll be on a quarterly basis. If they're funds, like more technology based where we don't expect to see a lot of dividends, it'll be on that annual basis. And if it's annual, it'll be paid out at the 30th of June, so end of financial year.
Sure, and you see all of that in your activity tab on Superhero as well. So we'll tell you exactly when the dividend was paid out, what ETF it was for, and the amount there too. I think we'll leave it last question with Kez, which is also about dividends, and then we'll leave it there for today. Do ETFs have franking on their dividends?
Yeah, so if it's an Australian related ETF, so like an Australian yield ETF where the underlying companies pay franking, then yes, again, they get passed on as part of that distribution. Majority of our portfolios are international. So international companies don't pay franking. That's just an Australian benefit. But again, if the company's underlying pay it, then it will get paid out to you as the investor.
Yeah, definitely. And sorry, I'm spruiking Superhero again, but it is a Superhero webinar. You can go into your reports tab, which is not on the mobile app yet, but if you're on your desktop, you can actually go into the reports tab and you can look at a bunch of our different statements there, which will actually give you detail on those dividends and on the franking of those dividends as well. And we do have one particularly for ETFs, which is a report as well, which will give you a bit more of that breakdown of information when it comes to dividends for ETFs. So if you wanted to see for the last financial year, for example, how your dividends were broken down, particularly for ETFs, you can go in and do that from the reports tab as well. And that will be unique to your account. So you can download your report there. We are nearly at 1:30, so I won't keep anyone any longer. Thank you so much for all of those questions. They were great, everyone, and we hope we answered them for you. We have recorded this webinar as well, so this will be up on YouTube for anyone that wasn't able to join for the whole time. So it'll be on YouTube by the end of today. But I wanted to say thank you so much to Gemma for joining me and telling us all about ETFs this year. Some super exciting things coming in the markets for next year that I'm sure we're all looking forward to investing in.
Yeah, thanks so much, Rachel.
Thanks everyone for joining.